It finally happened.
And it's gone.
What?
It's gone. It's all gone.
That's right. If you've been following along with my other videos on the channel, you'll already know that I recently sold all of my public stocks, or just about all of them. As you can see, all that's left in this M1 Finance portfolio is a couple shares of Berkshire. It's about 2.5 shares, and that's mainly because I'm going to be attending the Berkshire Hathaway annual meeting in a couple of weeks, and you need to be a shareholder to attend, so I'm just going to hold on to these shares. But otherwise, as you can see, every other holding is currently at 0, and I don't plan to add to this anytime soon, barring some crazy stuff happening. And I'll go over my rationale here in greater detail and what I really am planning to do with stocks in the future, because this won't be the last time that I'll be investing in public stocks. It's just right now, I think my priorities are best shifted towards something else. But before that, I guess let's take a quick look at the performance overall. Since I started this portfolio, it would have been back in, I guess the start date's right here. January 27th, 2020 is when I opened up the portfolio and started adding a good chunk of money in February of that year, and then things got pretty ugly for a month before we went on the wild ride that was the post-stimulus and post-other types of helicopter money era that really kicked off in 2020 and continued into 2021, and you could argue has really continued in many cases to today. But there are lots of things going on with monetary and fiscal policy. On the one hand, you see rates going up, but on the other hand, the government continues to spend lots and lots of money, and it needs to issue new debt to do that, and then you have bailouts and all that, but that's beside the point of this video. The point is, there was a lot going on throughout the few years that I was investing into this portfolio, and I got it up to something like $90,000 at its peak. I think I got about to $95,000 at the peak. Let's take a look at the value here. Yeah, just approaching 95 here, and then really took a turn for the worst when it came to 2022 and into 2023 before it kind of took off a bit in January of this year, and it's really started to come down after that. But I was also starting to liquidate at this point, so I'm not sure when exactly all that was happening. But overall, I lost about $17,500 in this portfolio over a few years, so definitely not a good performance relative to the broader market, which was definitely positive in that time. Granted, my contributions weren't all even, and they came at very different times, and I was in a relatively concentrated portfolio that became increasingly concentrated as we moved along. And a lot of the losses did come later in the life of this portfolio, and that's really because I was contributing consistently into this portfolio, so it really reached its peak size by the time I stopped making contributions, and that happens to be when we started to enter a much more rocky fiscal and monetary climate, and people definitely got a lot more skittish when it came to the stock market, which we're still seeing today. There's a lot of volatility since then, and my portfolio was not spared from that. But I guess what I'm really trying to say is that it's not as though I started with $100,000 in the portfolio on day one and then ended up with the negative 17. It was more like I was building up to that during that time, and then a lot of these losses kind of came towards the tail end of this picture we have here. And that's just because the portfolio happened to be larger than it was at the start. But either way, not a very fun result to lose about $17,500 on something like $100,000 invested over a few years. And now these 2.5 shares of Berkshire Hathaway, actually 2.44529 shares of Berkshire Hathaway B stock, is here to man the fort in. That's all we got left in this humble M1 Finance portfolio. But like I said, this isn't the last time I'm going to be investing into public stocks. Definitely far from it. But I want to explain kind of my thinking and my plan going forward. I've talked about it in this series before and elsewhere on the channel, but I really see stocks increasingly as a defensive asset, in that if you already have a bunch of money, it's a great potential tool to preserve your wealth and potentially grow it beyond inflation as well. It's not as though you can't make a bunch of money in the stock market. Plenty of people definitely do. But compared to other things that might be more what I would call offense, that would be driving new income, gaining new skills, scaling a business, and those sorts of things that can really increase your income to where you then have more income to invest in your portfolio. You have more stuff to preserve in the first place. And that's really the role that I see for my stock portfolio in the long term, at least my public stock portfolio. Because it's not as though the money from this portfolio was rolled into an expensive vacation or something like that. Instead, right now, it's really sitting in cash, and some of it has been used to pay down debt, but really the primary role for the cash from this portfolio should be reinvesting into either more private businesses or into the existing business that I have here in Houston. That's that carpet and steam cleaning business I bought back in January. I am trying to grow the thing and potentially investing in some new equipment, investing into new employees that might limit cash flow in the short term, but could really help the operation in the long term. I see that as a much better opportunity than me trying to put together some outsized return in the stock market. As you can see, I struggled with that over the last few years, and that's partly because I'm splitting my attention towards all these different things, and it just didn't make a lot of sense to pay all this attention towards a $50, $60, $70, $80, even $90,000 stock portfolio because I had other things that had a lot more at risk. Take my real estate properties, for example, or I had my career I was starting. I was in law school through a lot of this portfolio build up. So I just wasn't giving it the time and attention that it probably deserved if I really was trying to outperform the market. And even then, I still might have not outperformed. It's very hard to predict these things in the short term anyways. And that's part of the reason I was already in the middle of concentrating this portfolio down to fewer and fewer holdings so I could spend the limited time that I was spending on this portfolio towards fewer things and ideally would have a better outcome that way. But it still just wasn't really that motivating to pay attention to a $5,000 or $10,000 holding when instead I had this business that I just rolled almost 200 grand into that was very significant for my financial picture and I think has significant upside that I think is worth paying attention to. And I'd rather work on that now rather than spending all this time running a stock portfolio and actively manage stock portfolio at that. Now, I will say, as a caveat here, I do still have some retirement accounts with broadly indexed holdings. So they are very diversified, and it's sort of my insurance policy against my own stupidity or my own mismanagement or whatever. In the event that things really go wrong, at least would theoretically have that to fall back on. I guess if that goes to zero, we've probably got other problems, but I do still have that. So just to add some context here, it's not as though these were all of my stocks, period. I instead sold the stocks that were in my taxable brokerage accounts, the ones that aren't necessarily as restricted as the retirement accounts like my IRA or my 401k or my HSA and those sorts of tax advantaged accounts. I'm leaving those pretty much untouched, or I'll continue to make some contributions here and there as it makes sense. But at least when it comes to my actively managed portfolio, I want to spend a lot more time and energy towards the private business side of things. And at the same time, I have some pretty substantial debt that I'd like to pay down too, and some of that is at pretty high interest rates that would make it hard to justify leaving it into many of the public stocks that I held, at least considering what I thought the likely returns were. According to my own analysis, you might definitely disagree. But it's a question of would I rather take the guaranteed return, if you want to call it that, of paying down the debt and saving on that interest, it's the opportunity cost of holding that debt out, or would I rather leave it in this portfolio that I already wasn't paying really the amount of attention I should have been anyways? So now we're here. But looking further down the line, I want to get back to investing in publicly traded stocks at some point in the future. And that point probably will be when my businesses are doing really well without necessarily my own active involvement. That's not saying I won't be actively involved, but they could at least survive in a very good spot and they're producing plenty of cash flow without any of my active efforts to be factored in. And the efforts that I'd be putting in would simply be to push things further along, not necessarily to maintain things. And I'd also want to make sure that the cash flow from those businesses is so significant that it's actually becoming hard to reinvest into the business and that it's getting very difficult to grow. And I want to take some money off the table to put it into more defense. And at that point, I'd probably get a lot more active back into real estate investing, back into stock investing on the public side of things. And what that might look like is taking a sort of dividend out of the profits of the businesses that I hold and using it to build up the sort of defensive wall of other assets like stocks and real estate. And how quickly I get to that point will depend on my prowess as a business owner and investor. And I certainly will be trying to improve those skills over the coming years. But in the meantime, I guess you could say I failed the mission to reach $100,000 in portfolio value for this specific portfolio, and that is a shame because that really was the overarching theme of the series, was trying to reach the $100,000 mark, although it's kind of arbitrary since I would want a stock portfolio to be much larger than that, at least in the very long term. But I'll admit I failed the mission.
Mission failed. We'll get them next time.
But really, the mission isn't over because, as General MacArthur once said,
I shall return.
and so too I shall return to stocks. Now, this won't be the end of stock content here on the channel. I'll probably do some stock analyses here and there just to kind of see what's going on with certain companies, and also to see if we can learn about certain business models and things that might be able to apply to other forms of investing or towards other investing skills and all that good stuff. But it probably won't look the exact same as before. So if you want to stay tuned for those future videos, then definitely subscribe if you haven't already. I appreciate all those who followed along with this journey because it's been a few years to this point. So thank you for those who have been with me since pretty much the very beginning. I appreciate all your support. And during all the different things that I've explored and learned about investing, it's definitely been a very productive process. Even if I lost money on this particular portfolio, I definitely feel like a much more confident investor going into all sorts of different ventures at this point. And I guess you could say I'm also more confident in not investing in certain things as well. But above all, I'm just trying to improve. Thanks as always for watching, and I'll see you next time.